whenever we start trading, we start from the biggest time frame available to the market, to us on the market. It doesn't really matter what pair it is. It can be NZD, USD, AUD, USD, whatever pair, it doesn't really matter. We are price action traders, and like we explained, the definition of price action means what? Using historical and recent chart data to predict the future movement of prices. Okay, so that is why I do what? I start from the biggest time frame because I need the historical information. All of this historical information is going to allow me to know what the overall outlook of prices. And I need the recent information also. The recent information on 30 minutes, recent information on 1 hour is going to allow me to know the direction to pick for a real-time trade position. Okay, so that is the advantage of using price action as a tool to using price action to trade. Okay, so now that that is done, we are going to what? Start by identifying the structure that brought prices to the real-time area where prices is. Okay, so if we come, we're going to see that what something is clear. Prices is currently at this particular level here. This is where prices is at. Okay, so our job is what? Trying to understand the structure that took prices there. Like I said, we do this on every single trade, you know, every single pair, every single trade is the same thing that is done. That's why, you know, I've had students say, you know, my way of teaching and my way of trading is consistent. It's like I teach the same thing because that is what I do. You know, I work like an AI. I come onto the charts and I repeat the same thing every single time. Okay, so now that that is done, what is the next thing is what? The next thing is what? We should understand the information that took prices to that place. Okay, so what is the information? The information is what? Is the structures. And clearly we can see prices make push, exhaustion, push, exhaustion, push, exhaustion, push. Okay, clearly we can see prices go from small fractals to big fractals, which is 100% allowed. Okay, so this tells us overall that on GBP, JPY on monthly time frame, prices is clearly bullish. Without any iota of doubt, price is bullish on the monthly time frame. Okay, so now that information now, we are going to take that information and connect the information with the weekly time frame because we know that what, apart from being a multi-time frame trader, we're also a top-down trader. Okay, that is, we start from the biggest time frame and go to the smaller time frame, which is what is required for us as proper price action traders. Okay, so that same monthly structure is broken down here. It's still the same one: push, exhaustion, smaller fractals to bigger fractals. Okay, in the context of these fractals, this is the last I. Okay, I've talked about fractals and I said that what fractals are the length of the exhaustion. Fractals is never about the push, it's always about the length of the exhaustion. So within the concept of these fractals, you can see that this exhaustion from here to here does not, this is the biggest exhaustion, that all of these ones here are smaller exhaustion. So within the context of those fractals, this is the last higher low within the context of that fractal. So right now, our current tradable area, by the time prices comes and breaks this high, then price has broken that fractal. But right now, our tradable area is going to be between this low and this high. This is our current tradable area since price is still trading within that fractal. Okay, so we're going to zoom in into our current tradable area. And we saw prices make what? Push, exhaustion, small to big fractals as we know, then push, exhaustion. Price established another higher low here of bigger fractals. And it's 100% okay, like we know, to go from small to big fractals. Okay, so this is push, exhaustion, push, exhaustion, push, exhaustion, and push. Okay, so prices is on clear bullish structures of higher highs and higher lows. Okay, so the monthly is in correlation with the weekly, that what prices is clearly bullish, no iota of doubt. Okay, so this is the last higher low in the context of that fractals. By the time price comes and breaks this low, then price has broken into another fractal. But right now, price has not broken that low. This means that what our current tradable area will be what? This high to this low. This is going to be our current tradable area. Okay, so we are going to take that area to the daily time frame. Okay, this is the area that we just highlighted out, that high, this low to this high. Okay, so what is the structure? We can see price make what? Push, exhaustion, push, exhaustion, push, exhaustion, push. Okay, so the weekly, the monthly, weekly, daily all point prices towards to one direction, that what, without any iota of doubt, prices is clearly bullish. Okay, so now this is the last higher low. At the break of this low, price has broken this bigger fractals. That is the fractals from here to here. at the break of that low. Price has broken that fractal, okay? But right now, price has not broken that fractal. This means that what our current tradable area will be between this low to this high. Okay, this is going to be our current tradable area, and that is what we are going to take to the 4-hour time frame. Okay, so on the 4-hour time frame, our current tradable area, like we said, is between this low to this high. Okay, so within this, what did we see? We can see what the fractals that price is making. We saw prices make push, exhaustion right here. Okay, at this point, this is a bigger fractal. Okay, at this point, because this is the last higher low. Okay, so sorry, I mean this higher low is it has a wider length when it comes to the exhaustion. If you bring it from here to here, this is what 152 pips. Then the next higher low that is here from here to here, this is what 99 pips. So 152 pips is a bigger fractal. So this should be separated. Push, exhaustion, this is what a bigger fractal. So now this means that whatever we are trading, our current trade will be between what this low to this high here. Okay, so whatever opportunity currently, since if prices goes eventually and creates an higher high, then prices probably would, let's go ahead, let's measure this again. This is what 154. Then the next one is 200 plus pips. So if prices establishes this as an higher low and goes up to create an higher high, then this would now be what a confirmed higher low. Okay, but an higher low is not established until there's an higher high. Okay, it works like this: push, exhaustion, push. You cannot, if prices is here, you cannot say this is an higher low. An higher low is only established when prices creates an higher high. Okay, so for those of you, maybe if you're new or something like that, and you're thinking, okay, because prices, left here, why is this not an higher low? It is because price has not created an higher high yet. Prices must create an higher high for this to be established as an higher low. Okay, because at the end of the day, prices can actually, you can come like this and come like this. You understand? So this is never an higher low, until what an higher high is created. So within the context of what we're trading right now, this is push, exhaustion. This is a separate fractal. Okay, let's look for our opportunity between this low and this high. Okay, so let's go down to the 1-hour time frame and take that information there. Okay, so like we said, this is what push, exhaustion. This is what a separate fractal currently. Okay, so within the context of this, let's go ahead and see the other fractals. Within the context of these fractals, this is what push, exhaustion, push, exhaustion, push. Okay, within the context of these fractals, this is push, exhaustion, push, exhaustion, push. Okay, and within the context of these fractals, this is the last higher low. Okay, so that is what if prices comes and breaks this low, price has broken this fractal. That means that what we'll be selling for a retracement. Okay, so this means that what? But right now, one thing we can all see is that this is the last higher low within the context of this fractal. If you measure the length of the exhaustion between this high to this low, this is the largest here. Okay, so this is the last higher low here. So now when prices comes and breaks this low, we know that price has broken the fractal that starts from here to here. Price has broken that fractal. Okay, but right now price has not broken that level. Okay, this now slims our tradable area to what? To this low and this high. This is our current tradable area now, since we've separated what? Push, exhaustion, push, exhaustion. This is the last higher low here. Like I said, when price breaks here, price has broken into another fractal. But right now, our current tradable area is just between the low here and the high here. Any break of structure, as usual, we are selling for a retracement. Okay, and if we are buying, we know we are buying in the direction, because every single time frame from the monthly down to the 1 hour has shown us that price is clearly bullish. Okay, so now we'll take that information to the 30 minutes time frame. Okay, to trade between our current tradable area, which is this low, and this high. So we'll take that to the 30 minutes time frame. Okay, so on the 30 minutes time frame, what are we seeing on the 30 minutes time frame? Okay, so on the 30 minutes time frame, at this point we saw prices make what? Push, exhaustion. This is the last higher low of this particular fractal here. Okay, because after this higher low, prices made smaller structures, but overall prices came and prices broke the bullish structure right here. Okay, at this point there was a clear break of an higher low. Let's identify it again together. This is push, exhaustion. This is the last higher low right here. Then prices made the push and prices broke structure right here. Okay, So now that prices broke structure, we know that if we are selling for a retracement, and the maximum available level available for us to trade a retracement is the 61.8. So we'll bring our Fibonacci from the low point right here to the high points. Okay, so we discovered that what? When prices broke, this is push, exhaustion, push, break of structure. We discovered that what? When prices broke the structure, prices has already gone to the maximum allowed for us in a retracing market. This means that what? There is no sell opportunity, because even though a break of structure has happened, but price has already exceeded the maximum allowed for us to trade in a retracing market, which is the 61.8. Okay, so that means that what? The sell opportunity is done. Okay, the only thing we are going to be looking for now is a buy opportunity to the 100.0. Okay, that's the only thing we're going to be looking for, a buy opportunity, clearly. Okay, so now that we know that what the sell opportunity is done, okay, and we know that what 61.8, all of these levels here are reversal areas. Okay, and all of these levels here can actually send back prices back to this 100.0. Of course, it is, we have to look for what? We have to look for a clear break of structure. Okay, so now from this point, prices got some bullish momentum, and now the structure that brought prices down, which was push, exhaustion, push, exhaustion, in the context of this fractal, this is the last higher low, push, a clear break of structure has happened. So now there's been a clear break of the bullish structure. Price is done with that particular bearish structure in the context of that fractals, and it did not give us a trade opportunity. Okay, because price has already gone to the highest level available for us in a retracing market. So right now, our only opportunity is a bullish opportunity, and we clearly saw that what the structures that brought prices down for that retracement have been violated. The structure that brought prices down for the retracement, and the structure has clearly been broken, letting us know that what, okay, the bulls are here and the bulls are ready to take prices to what? To the 100.0. Okay, so for those asking, you know, what does 100.0 mean? You use your Fibonacci inversely from the high to the low. Okay, so clearly at this point you can see the 100.0 right here clearly. Okay, so right now it's an inverse Fibonacci that I'll be using to buy towards to the 100.0 levels. So what are we doing? We know that what we are buying to 100.0, no doubt about that. So our job is what? Our job is using either of our entry variations to enter this trade. Okay, clearly with entry variation 1, just by looking at it, it won't give us a good risk reward. Okay, this is a candlestick that broke the structure, right? Our stop loss has to be price action driven at low at 133, and our exit is at what? 84. So that means that what is a negative risk reward. So we will not be entering this trade using what? Entry variation 1, because any trade we're entering at minimum, we must have what? A 1:1 risk reward at the minimum. Okay, so in that case, what are we going to do? We're going to swing our odds to what? To entry variation 2. That is what? We are going to hope in this type of case that what? After a break of structure, which usually happens that what? After a break of structure, because usually prices breaks a structure. In this case, it's a break of a bearish structure. Price is coming from a lower low. So usually after price breaks a structure, in this case, coming from a lower low, price will want to establish an higher low. Okay, to have a coordination of what? Of higher high and higher low to fully establish its bullish structure, and to also come back and pick more bulls. Okay, so in this case now, we've seen what? A clear break of structure at this point. So now that we've seen a clear break of structure, what are we going to do? We're going to bring our Fibonacci. Okay, to get your entry using what? Other variations like entry variation 2 or entry variation 3. To get your entry, if there's a break of a bearish structure, what do? Bring your Fibonacci from the lowest point to the where the structure is broken. Okay, we can see that all these areas here where the structure was broken. Okay, so price can even decide to go higher, it doesn't matter. So if price does not get to our take profit at this point, there can still be an opportunity of a 61.8 retracement. Okay, so these are the little tweaks to know when using Fibonacci. Fibonacci is not difficult to use. It's one of the simplest tools to use. Okay, but you have to understand these few things. That what? If there's a break of a bearish structure, to find your entry, use the Fibonacci from the top to the bottom. Sorry, to find your exit, your take profit. Right now, we've seen what? A break of a bearish structure. To find your exit, what do? Bring your Fibonacci out from the top to the bottom. Direction of trend, our take profit is at 100.0. Retracement, our take profit at 61.8. While what? To get your entry using what? Other variations. A break of structure has already happened. So what do? Bring your Fibonacci out from the lowest point to the point that to the point where the structure was broken. You know, all of those movements there, and see if prices will come back to 61 point, the lowest point to the highest point of the break of structure, and see if a retracement will happen. If a retracement happens, fine. What do? Pinpoint prices will meet my buy stop at 61.8. Okay, or even if it's not a buy stop, I can click it manually. The buy at 61 point with my stop loss what at the low below 100.0 now of this Fibonacci. My stop loss is at the low. This is a price action driven stop loss. Okay, so entry at 61.8, stop loss at the low right here of about 64 pips, or maybe something around here, you know, maybe let's say about 55 pips averagely around the 100.0, since there are lots of wick around here. So averagely, let's just say around 55 pips. Okay, and my take profit will be what? Around 154 pips averagely. So this one should be a trade that will give us, without any doubt, about 1 ratio 2.6, 2.7 risk to reward, using what? Entry variation 2 of what? Pinpoint 61.8 bar. So that's the opportunity that we would be looking for in this trade. Of course, we know we have entry variation 3, you know, which is something that can also happen, you know, which is an opportunity that we might also see. That is what the structures that take prices to 61.8 for the retracement. You know, the structures that took price to 61.8 for the retracement. What do? You wait, you look for a break of that structure and you buy. This time around, your stop loss will be hidden above the last low here. Okay. So the only reason why we are, so now that is the rules, you know, with entry variation 3, with entry variation 3, when the break of structure happens, what do? Put your stop loss at the last low and what? Buy to direction of trend.